Let's talk about the engagement letter. This is your contract. This is the contract between you and the auditor as to what everybody is going to do. Okay. Documents and confirms the auditor's acceptance of the audit. Outlines purpose, objective of the audit engagement. Again, what is our objective? To have a single audit performed in accordance with 2 CFR 200 and generally accepted government auditing standards. Specifically states what the auditor will and won't do. There's always a disclaimer paragraph in there that says we're not auditing the financial statements of individuals in the tribe. This is just the tribally owned stuff. So there's a lot of required language there. Also talks about how we're not going to make decisions for you and that you have to take ownership of the information. And that's one of the biggest ones with management responsibilities. You, as an organization, certify that you have provided all of the information, you are not holding anything back, and you understand that it's your responsibility to disclose information to the auditors. Lucius is very excited to be here this morning. Confirm understanding of when the audit will be complete, which is usually, 24 hours before the due date. Audit fee estimate, it's usually fixed unless there is a discussion with the client. If you don't make all the copies, you're going to have to pay for that, and that's not included in the audit fee. If something comes up, we discover that there's a section that needs to be audited that wasn't included, then there should be a discussion with you about modifying the scope of the audit. Okay, but in general, that fee should be pretty fixed. Out-of-pocket expenses, I would look at making sure they're charging DSA rates, and there's no reason they can't be. So kind of look at that. Communication with you on other matters. They have certain reports that they're required to send. In addition, at the end of the audit, there's usually a letter issued to the tribe that basically says, hey, here's some things we saw that you should probably fix. They're not findings, but we think things would work better if you did this. Things like file organization. That was always one of my big ones. Standardize your files. Tribe has to sign off on it. Usually comes to you signed by the auditor, unless there's any back and forth negotiation on terms, not price. It should already come to you signed. And then how do you return the engagement letter? Do you have to mail it before they'll start? Do you hand it to them on field work day? I mean, how do you do? Questions on that? Why is the auditor the one putting it together? Anybody know? Trying really hard to use my head to block the glare. I don't know while I'm working at it. Yeah, conflict of interest definitely needs to be addressed. The auditor has to put the letter together because there's a ton of standard boilerplate language that has to be included for the auditor to have a compliant engagement letter. It's one of the first things that they look at during peer review is, what does your engagement letter say? Did you do all of your disclosures? Did you identify who's responsible for what? So it's almost always going to come from the auditor. Questions on that? How many of you have your attorneys review the engagement letter before signing? Yeah, it's not a bad idea. Honestly, if it's one of the firms that we discussed yesterday, you don't need to worry about it, as in they're not going to throw anything weird in there. But it's never a bad idea to have your attorneys look at things before signing, because that contract's now legal agreement. Prepared by client list. Here's the big list of stuff that you are expected to provide to the auditor before the auditor starts work on site. Ooh. It's not all inclusive. This stuff comes up during the process. We didn't know you had that, so now we need to look at this piece. Do you have documentation to show that you got HUD approval for sole source procurement? One of the key things that you will be expected to provide early is the schedule of expenditures of federal awards. That is 100% where the audit starts for the auditor. How many of you have electronic documents? Is your auditor just, are you giving them a sign in to your system and letting them pull their own stuff? Okay. Does anybody else have a situation where the auditor is requesting printouts? Man, I would have loved to have had that sign in because I would lose paper all the time. I'd feel really bad about it. And I know half my audit clients thought for sure that I was just driving down the street, tossing documents out the window. Wasn't, but there's a reason they would believe that. Okay, so you do provide printouts. So they give you a full list of everything they want as they're going through, and then you do the printout. Yeah, doesn't matter as long as the information is there. All right, let's get into it. We talk about being audit ready. What the heck is that? I mean, how many times have you heard, always be audit ready? What does that even mean to you? ready to be, yeah, you need to be ready to be audited. But there's more than that. It means you're constantly ready. You've got things are done. You're not waiting until the end of the year to do your bank reconciliations, to do your schedules, to do your audits, your verifications, all of those things. It's it's a matter of staying on top of your job. Everything listed here is part of being audit ready. Do your job on time throughout the year. Have those reviews. Don't wait until the last minute, the last day of the year. Support your numbers. Angela, it's fine. I just wanted you to know why nobody was responding to you. Prepare your schedules. What kind of schedules are we talking about? Prepaids, AP, AR, fixed assets, all of those things. I mean, here's your trial balance. How many of you are still providing a trial balance to your auditors, or are you providing only financial statements? You're doing both. Both. Yeah, I think that makes sense. I think it's perfectly logical to provide both because it's easy to verify all of the accounts made it into the financial somewhere. That's one of the big things that you're really looking at. And with the trial balance, also getting a look at, okay, let's look at MEPA liability and MEPA investments. Is that going to be a question? When I'm looking at this as a whole, do I automatically have a question on that? Line item 2600 and line item 1160. Yeah, why is the liability higher than the investment balance? Could be that there's cash in that general operating account that goes with that MEPA investment, but it's definitely something I need to look at because I should have at least enough to cover the liability. So where's the rest of it accounted? Does that make sense to everybody? And then we also have all of these work paper references. What do you suppose A1, A2, and A3 are? If you were going to guess, what do you suppose A1, 2, 3, and I think there's an A4 as well. Yep, an A5. Placement, nice try. What do you suppose those are? What's the work paper reference? It's most likely a bank reconciliation. Those are cash. What work papers do we use to verify those? I can almost guarantee you A1, A2, A3, and A5 are bank statements. A4 probably going to have to go cash. Go count the cash. B2, 3, and 4. What do we have there? Show me why this is outstanding. Could we have a grant receivable for IHBG at the end of the year? Does that make sense? Would we say the rule is on drawing down grant money? Yeah. We spend it, then we draw it. Is it logical that we would have a grant receivable at year end? Sure. What would happen to cause a grant receivable at year end? Paid all our bills on the last day of the month, and we requested the drawdown and it hasn't been received as of the end of the year. Yeah, happens all the time. The prepaid expenses, there's some schedule showing us here's what's included in that. We would have inventory fixed asset reports for all of the D's. E, 1 and 2, we're going to have a schedule. Who do we owe? How much? We'll have for all of the F pieces, we'll have payroll liability detail. What are refundable advances? Grant money that we have on hand that's not yet spent. So we have the cash and we have to do a liability. Refundable, advance, deferred revenue, same deal. What do we have in the H work papers with this notes payable? They may have notes payable that you have to deal with. Okay. Generally, if you do have notes payable, you'll have the detail and you have to show the current portion, including interest, and then you have to have a note disclosure of everything that's due beyond the following year. So it's usually split out between current and non-current for full note disclosure. So if you ever have to do that, now you know. Any questions on this? Why is MEPA liability an A? Same reason security deposits are, because we're showing that that cash is restricted. Okay, ongoing trial balance. What would we count in question? Furniture and equipment. Yes. What's the question? The 5K rule applies, yeah. I would not add any new furniture and equipment into your fixed assets, because then you have to tag it and track it, and you're going to spend more time tracking it than it costs to buy it in the first place. Now, if you still have, and honestly, you shouldn't have any furniture still in there, should be depreciated out, because that's when the 5K rule, let me back up. The 5K rule is a federal limit. So the first thing I would do if I were you is check your policy and see what limit are you using. If your policy says you use the you're using $1,000 as your capitalization, then you would have all of that in there. And if that's the way it's set up, what do you think I'm going to recommend you do? Change the policy. Yeah. You're just making more work for yourself. %, try to convince board or council to change the policy so you don't have to tag and track a chair. You're welcome. Again, if you've got questions on it, shoot me an email. I'm always glad to answer. Okay, so here's just a basic list of expenditures. Do you have any questions on that? What are all of these D work papers? Where did they go? They all tie back to this furniture and equipment and accumulated depreciation. Everything that was treated as an asset is detailed here. Does this make sense? Because if not, now's a really good time to talk about it. Is everybody clear on why we would have a capital asset building on our financial statement and then a contra expense? What caused that? The contra is actually, the process was we were building the building or bought a building. Somehow we acquired a building. And to show that we purchased it, it goes through the statement of revenues, expenditures, and changes because we paid cash for it. So we bought a building, the capital outlay of $429,060. What happens to that building at the end of the year? We take it out of the capital asset, capital outlay, and transfer the fixed asset. So we took it out of our statement here and put it in here. Okay, does that make sense? Okay, as we can see here, it was actually still work in process because the numbers happen to be the same. But we have to capitalize it now. Same with land, same with infrastructure, equipment. Remember when I talked about how you have to break out the detail for notes payable? What was paid this year, what's due in the next year? That's where this comes in. This is how much we paid in principal and then we paid interest. And all of that will track back to our loan payment, or loan note payable. Okay, we good? Ready to move on? Talk about the process. Okay, so we've got our engagement letter in place. We've started providing information to our auditors. They've done any inventories required, any observations that they wanted to do at year end. All of that's been completed. Wow, I'm like having an eclipse here. This is really bizarre. So now what's the auditor going to do? Determine whether the financial statements of the auditee are presented fairly in all material respects in accordance with generally accepted accounting principles. Determine whether the schedule of expenditures of federal awards is stated fairly in all material respects in relation to the financial statements taken as a whole. What the heck does that all mean? What is the auditor engaged to do? Provide an opinion on the financial statements as a whole. It's an opinion, material respects. Does that mean that they are 100% certain that the value of that land is $829,000? What do you think? Means that based on the information provided through bill of sale, through everything else, that the land is stated at probably the right amount. Maybe it was, it could have gone $100 either way. But based on the information you provided with the bill of sale, any appraisals, anything like that, the way you're presenting it is correct for your documentation and in accordance with the rules. All right, the auditor will also issue an opinion on compliance requirements for each major program. As part of that, the auditor must perform a review on internal controls over federal programs using the compliance supplement as guidance on the recipient's internal control over federal programs to ensure compliance with either the Green Book or COSO. This is why we spend so much time talking about internal controls the first 2 days. It's what your auditors are looking at. Does your system work? Oh, look, this looks familiar. Effective, efficient operation, reliable financial reporting, compliance with laws and regulations. Have we seen that before? Yeah, we have. The auditor must determine whether the recipient has complied with federal statutes, regulations, terms, and conditions of the award that may have a direct and material effect on each of its major programs. The auditor must follow up on prior year findings and perform procedures to assess the reasonableness of the prior audit findings prepared. You're preparing a schedule on any prior year findings you had, what you did, and whether they're resolved. The auditor then goes and verifies that schedule, testing what you told them. Okay. Questions on that so far? And then obviously sign and complete the data collection form. The data collection form is the form that is submitted to the Federal Audit Clearinghouse. The data collection form is public information. You choose whether you want to make your audit public or not. All right, how are we doing? Anybody have any questions yet? How does the auditor know what terms, statutes, regulations, terms, and conditions of federal awards have a direct and material effect on the financials? Do they just know? Is it magic? Who is this report going to? This report is meant to verify your activities to the funding agency. The funding agency is going to identify what they consider the most important things. We've talked about the compliance supplement. The auditor uses the compliance supplement that is issued by OMB, Office of Management and Budget, based on the funding agency's requirements. How many of you are familiar with the compliance supplement? Have any of you ever looked at the compliance supplement? Do you have any interest in seeing it? Yeah, as long as you're here. Okay. Hang on. See if I can pull it. One would hope. This is the compliance supplement for IHBG for 2022. And it's like, let me do that. Okay, what are the objectives? What are the grant objectives? Provide safe and affordable housing to Native Americans. Program procedures. What do we have to do? We've got to have an IHP that meets NAHASDA requirements. We have to follow the rules for any CARES money. We have to follow the rules for any American Rescue Plan money. What are the compliance requirements? Here's the part that's important to you. These are all the potential compliance requirements for any grant award. Okay. The Y says, dear auditor, we expect you to test these. So for NAHASDA, for IHBG grants, activities allowed or unallowed, allowable costs, cost principles, eligibility, procurement, suspension, debarment, reporting, and special tests and provisions. And then here's what they're talking about. For activities allowed or unallowed, everything has to be in the IHP, which has to be one of the allowable housing activities in NAHASDA 202. See how all these pieces are starting to come together? Allowable costs, cost principles. You have to follow 2 CFR 200, subpart E. Golly, this looks familiar, doesn't it? I mean, didn't we just spend a day on that? Eligibility. Low income Native American. If you do assist somebody who is non-low income, you have special rules you have to follow. I mean, this is basic admissions and occupancy right there. Procurement. You're required to follow Indian preference in all of your procurement. In addition, you got to follow your own policy. Reporting. SF 425. HUD 52737, which is the IHP APR. Special tests and provisions that apply for IHBG grants. Wage rate requirements. What is that? How do you meet the wage rate requirements? What does this mean? When you contract, do you reference Davis-Bacon or tribally determined wage rate? And then do you do the follow-up to ensure that the contractor complies? Environmental review. Well, we're familiar with that one. Okay, that's it. How many of you had seen that before? Anybody? They update it every year, usually around May. You can Google compliance supplement. Remember those assistance numbers we've talked about and how those are, how you have to put those in your CFA? This is another reason why. We have to pull, we being the auditor must look at the compliance supplement that applies to that program and then design the test to assess compliance with those requirements. Auditee responsibilities. You must prepare the schedule of expenditures of federal awards for the same period as the financial statements. Why do we even have to tell you that it has to be the same period as the financial statements? Why is that a necessary statement? Do all grants have start and end dates in that tie to your fiscal year? Yeah. So what they're telling you is you may be providing partial year, and that's fine. That's what you're supposed to do. Okay, now looking at this, does it make more sense after looking at the compliance supplement? Maybe not. Okay, let's talk about major program determination because we keep throwing the term around. To determine major programs, it's a risk-based approach. Okay, the auditor is going to determine it in a couple of different ways. First, they're going to look at the dollars, and we'll talk about that in a minute. Then once they identify the type A programs, which are those generally over 300,000, maybe more, depending on your organization. Look at this schedule, assuming we're looking at 300,000 as our mark for type A versus type B. Which programs are type A? IHBG, loans. Everything else is type B. Okay, keep that in mind because that may become relevant. Okay. AB minimum threshold right now is 750. Do we have any type A programs based on that? Looking at this chart, do we have any type A programs? We do not. Everybody's the type B, correct? Maybe. Okay, so the first step is we identify who's the type A, who's the type B. We just said everybody is a type B. So now we have to identify high-risk type B programs. In addition, we have to cover at least 40% of the federal expenditures. So at a bare minimum, looking at this, oh, who's got a calculator? Who wants to do some math? Okay, I'm going to just say that the 40% is, let's see, 1.8. Okay, what's 40% of 1.9 million? $760,000. So when we look over here, we know we have to test 40% of our total grant funds. Everybody is a type B. We're going to do a risk assessment. That's okay, I knew what you meant. And thank you. So what's probably the easiest thing to do here? How do we determine risk? We're actually looking at it from a different standpoint. We're looking at, for the program itself, has it been audited in one of the last 2 years? Has it been monitored recently? Has the federal agency said that this program is inherently risky? Do we have, is it new? Have things changed so that we've got some risk in following through on everything? New personnel, new staff, all of those things can increase our risk. So when we're looking over here, again, what could go wrong? Risk assessment. Who are we going to test? Are we going to test loan proceeds? No. Do you want to test IHBG? I do. I want to test IHBG and ICDBG. Why would I choose those two? Probably would choose transportation as well. Why? Or I could choose the IHBG, ICDBG, and maybe the BIA grant. Why? Why would I make those choices? What's involved? I have to hit the $760,000 threshold. Higher dollar programs are usually more risky, which means I've got a higher chance of messing something up. Let's say on the IHBG, we had suddenly added some new activities. Would that increase our risk? Absolutely. We just added an elders rehab program that we've never run before, and it has more requirements. They have to be elders, they have to own their own home, they have to have insurance. Depending on amounts, we may have useful life binding commitments involved. Am I going to test that? Absolutely. We are using our ICDBG grant for construction. Are there risks in construction? Yeah, we just talked about special tests and provisions. So we need to consider, was this procured properly? Are they following the wage rules? And did we have the environmentals in place prior to starting work? Here's your helpful hint. Treasury has already said that the Emergency Rental Assistance Program has a high inherent risk. So if that is a type A program, has to be tested. If we are looking at testing type B programs, it's a high risk type B and has to be tested. There is a compliance supplement for the ERAP program and for the HAF program as well. If you want copies, I have them handy because I keep referring to them. They're going to get tested, guarantee it. Okay, questions on that? Let's start testing some compliance. Okay. 200-303, you're required to establish and maintain internal control over the federal award that provides reasonable assurance that you're managing the awards in compliance with statutes, regulations, terms, and conditions. Auditor has to gain an understanding of the internal controls sufficient to plan the audit to support a low level of control risk. Audit will have to test controls to support a low level of control risk for the relevant assertions. Those are those pieces we just talked about. Assertion is eligibility, that we have the required policies in place, that we understand where the risks are in determining eligibility. What's the biggest risk in determining eligibility for IHBG? If you're going to screw up an admission, what things are you going to screw up? What do you have to do to admit somebody? What's the bare minimum? Low income, Native American, follow the wait list, and verify that there's no conflict of interest. There's other stuff involved, but that's the bare minimum. How could you screw that up? Where could mistakes happen? About an income determination. Is there a risk in determining income? Is there a risk that we might admit somebody who is not low income? Yeah, that's a big risk. It's probably the biggest risk in eligibility. There's a risk that we did not follow the wait list. There's a risk that there was a conflict of interest that did not get disclosed. So the auditor is going to look and see what controls do you have in place for that. What are some of the basic controls you have in place? First is your policy, which says this is how we determine income. These are the things that are included. We are testing income at time of admission, and we have the most current income limits so that we can verify that this person was not over income. Okay, that's the control. Now I'm going to test the control. How am I going to test that control? I'm going to pull a sample of participant files, probably looking mostly at new admissions. And I'm going to see, do you have that documentation? And if you do, was it correct? And if I go through, let's say I pull 10 files, and all 10 files have the documentation that you said they would when you put together your policy, have I done the work to support a low level of control risk? As in, there's a low risk that somebody has been admitted into this program that shouldn't be. Is this making sense? Sandra, I'm so glad you're still here. Kay, you too. Abby as well. Yeah, this is all we're looking at. That's all we're talking about when we say understand the control and then test it. Here's how you set up your control. These are the control activities you put in place. We've tested them. They're there, they're functioning. Are we going to have a finding on eligibility? No. What if the auditor starts testing and discovers that the documentation is not there? It's inconsistent. Some of them are really good. Then what happens? First thing the auditor will do is probably expand the test and see, did I just pull a bad sample? If the problem holds, then you have probably a material weakness. And that's an audit finding that's going to have to be addressed. Questions on that? Okay, what is control risk? Control risk is a risk that there is material non-compliance with one of the requirements of the grant because either there are no internal controls or that the controls in place did not work as planned. Anytime the auditor cannot say that your internal control system worked, there's going to be a material weakness or a significant deficiency. If we have the eligibility documentation, we have assessed, we can support a low level of control risk. If your policy says you're doing this and we cannot find evidence in the files that you did, we have a problem. So who should find out that the information isn't in the files? Should the first time you hear about it be from the auditors? No. Who should find this? Let's say the admissions staff did not get it for whatever reason. They did not catch the problem. Who should have caught it? Who was the next line of defense? You're self-monitoring. And maybe you, finance officer, but I'm going to say it should have been self-monitoring. Because as the finance officer, are you reviewing are you reviewing admission files to determine that the person admitted has all of the eligibility requirements covered? You do? Okay. All right, then we're going to point a finger at you. Department head for housing should be reviewing. Yeah. For whatever reason, it got through. Whoever was supposed to review the information didn't do it. Should have been picked up in self-monitoring. So by the time it becomes an audit material weakness, how many places did we fail? Staff, reviewer, monitor. So we had 3 fails before it got to the auditor. Would you agree that probably is a significant deficiency or a material weakness? Yeah. Our system didn't work. We had checkpoints set in here, here, and here. And I'm going to assume your staff uses a checklist as well to do eligibility testing. I would. I love a checklist. But I think it's really important when you have things like procurement and like admissions and eligibility where you have multiple requirements. It's really good to have a checklist so you can go through and say, yes, we did get all of these pieces. So let's say it happened. And if we find one that was missing a verification, is that going to be a significant deficiency or material weakness? Probably it won't. It's a judgment call. I would probably, remember we talked about that management letter where the auditor details out things that were discovered that weren't really findings, but you probably need to know about. That's where I would put it. If it was one file and only one small piece of the verification was missing. If it was a file with no eligibility verification, oh yeah, now that's a finding. It's a judgment call. There are guidelines in determining finding or not finding, but ultimately it comes down to auditor judgment. This is why it's so important that your auditors are independent. Think about it. I've worked with you for 20 years. I've been doing your audit for freaking ever. And I see this little blip in the system. And I go, oh, they know better than this. I'm sure they picked it up somewhere else because there's never been a problem before. Am I evaluating that fairly? I'm not. I'm not independent in thought because I'm making excuses for you based on past behavior. The other side of the coin is you get the brand new audit staff and man, they so want to write everything up. Bless their hearts. So yeah, it's important to have a mix of people on the audit team and have balance. Oh yeah, they think they're going to get like bonus points for finding something. Trust me, nobody's getting a bonus for that. They don't have, that's why we say skills, knowledge, and experience. Do they have the skills? Absolutely. Do they have the knowledge? Yeah, they do. Do they have the experience to properly evaluate? Not yet. So again, goes back to yesterday when you're talking to firms you're considering for audit, do we have a good mix of experience and new? I don't want to fight these people the whole time. Questions on this? Okay, so as part of the testing, objectives of internal control over compliance are verification that transactions are properly recorded and accounted for in the financials, in order to permit preparation of reliable statements and reports, maintain accountability, demonstrate compliance with statutes, regulations, terms, and conditions. Transactions are executed in compliance with federal statutes, regulations, terms, and conditions. Any other statutes and regulations identified in the compliance supplement. What kind of transaction would have additional statutes, regulations, terms, and conditions that would have a direct and material effect on the federal program that was mentioned when we looked at the compliance supplement? Procurement. Do we have multiple additional requirements depending on the type of procurement we're doing? Absolutely. In addition, we have other reporting requirements, other requirements at Davis-Bacon or tribally determined wage rate and environmental that have to be addressed as well. We want to make sure that funds, property, and other assets are safeguarded from loss, from unauthorized use or disposition. What kind of unauthorized use might we have? I'm borrowing the tribal vehicle to take a personal trip to Las Vegas. What controls do we have in place to keep that from happening? Think about take the keys. Yeah, I mean, are the keys kept someplace where they're secured and have to be checked out? I mean, if I'm thinking about taking a tribal vehicle to Vegas, I probably don't care what the policy says, but what do we have in the policy that's going to protect things? Because I obviously can't be trusted. How do we have segregation? Keys are kept in a secure place that are not available to the public. How many of you have your vehicles locked in some kind of fenced compound? How many of you have mileage logs? Same person who signs out the keys must also account for the miles. Yep. Are those ways to prevent or at least detect if it happens? Yeah, those are good ones. Is it going to stop me? Not if I'm motivated. But it's going to make darn sure that you are somehow triggered that a problem occurred and you get it addressed. Reminder again, you've got to have all 5 parts working. Objective back here. Control objective is to protect assets from loss or unauthorized use. What's our control environment? We have a policy. This is for the vehicle that I'm going to try and take to Vegas. We have a policy in place. We have training. We have additional reviews in place. The risk assessment, the risk that somebody would take the vehicle for unauthorized purposes. The control activities include our locked area, the mileage logs, limits on access to the vehicle in the first place. Information and communication, people are aware that there are rules and that they have to go through a process to use a tribal vehicle, and that information, mileage logs, access records are reviewed regularly and discussed. Monitoring, somebody is pulling those records and would question, why is there $2,000 or 2,000 miles charged to this vehicle for a weekend? Make sense? Why don't we take a quick 10-minute break? Does that work for everybody? Or do you want to keep going on environment? Nope, you all are like, nope, let's break. All right, come back at 42 after the hour. Yeah, the correct answer is yes, and I did get a 3rd cup of coffee. Okay, control environment components. Again, here are some things that your auditors will test.
Hey, not much here, chilling.
You know you're not muted, Elizabeth. How do you know it's day 3 of training? Here you go. Okay, code of conduct is developed, documented, communicated, periodically updated. Does everybody have a code of conduct somewhere? Yeah, it's almost always in personnel manual. Policies and procedures are in place to provide for segregation of duties. I'm sure that that's already in place. Board communicates with external auditors. Why is that important? Why should the board actually be in communication? They should approve any contract. They should be involved in the contracting process. And they will be signing some of the communication back and forth. The auditors have questions or have things to report, it should go to the board. Why? Because they're the ones in charge. They are the oversight. Do you provide appropriate training for staff involved in compliance? Okay, well, first question, what staff is involved in compliance? Everyone? I mean, think about it. Who on your staff would not somehow be involved in compliance and regulation? Is there anybody who's not somehow involved? Not that I can think of. Do you provide appropriate training to everyone? Are there consequences for non-compliance? Does the board have consequences for non-compliance? How should that be addressed? If you have a board member who, for whatever reason, is not following your code of conduct, they've decided to micromanage. How does that get addressed? The board should address it internally. Management should bring it to board members' attention and let them address it internally. If they don't, then what? It's on them. Risk assessment. Management and a board have identified key compliance objectives for different types of requirements. We just talked about key compliance objectives for eligibility compliance. Employees receive appropriate training to address identified risks. Board and management review audit findings to identify fraud risk. If we have a material weakness, is that a fraud risk? Material weakness says our system didn't work. This was our objective, and we failed to document everyone was eligible prior to admission. Is that a fraud risk? Oh, yeah. Communication process in place with funding agencies to identify changes in compliance requirements. How do you find out something has changed? Broadcast bulletins. Yeah, I mean, I found out that there was a change in program income. It's nothing significant, but I found out there was one that I needed to look at by looking at the Eastern Woodlands ONAP bulletin yesterday. Yeah, sign up for that regional information. Yeah, a lot of times if your auditors will do updates to you, but your main source of information for anything ONAP related should be Code Talk website, Code Talk newsletters, training, and your regional housing. So your local ONAP, your regional office. Eastern Woodlands does a good bulletin. Like I said, I just found out some stuff yesterday. Okay, questions on that? We find the change. We address the change. We acknowledge that that has changed our risk assessment because now there's new information and there's a risk that people within our organization don't know about it. And there's a risk that our policy is no longer current. So what are we going to do about it? For allowable cost principles, the first thing we're going to do is identify risks related to unauthorized changes in the financial system and identify specific actions to address risk. We're specifically looking at allowable cost principle control activities because frankly, we could list control activities all day long for each one of those internal control components. We're going to try and keep it narrow. So we're trying to identify a risk related to an unauthorized change in the financial system. Specific actions to address the risk. Password protection, review of reports by knowledgeable staff. How do those protect us from having charges to the grant that are not allowable? We limit access to the people who are trained. We have people review it who know what was actually done. Management identifies specific allowable activities and costs and communicates to finance and appropriate staff the costs that are allowable under a grant. How does your organization get the information out for allowable costs and allowable activities? How do you know what's allowable? You look at the IHP. The people who help develop the IHP, each individual activity, should have a really good understanding of what was included in that original budget and be available to assist in reviewing and updating information. We already said that finance doesn't do the coding. But what authority do they have for allowable activities and costs? Finance may not know whether supplies, what specific activity supplies would be charged to, but they certainly know, yep, they know what's allowable overall, and that no, we can't charge fines, penalties, and interest to grant funds. You got a speeding ticket that you're trying to turn in on your travel? No. And how does that information happen? Through information communication procedures. Segregation of duties ensures that the same person does not initiate, approve, and record a transaction. At least monthly, management, board, and appropriate personnel review the budget to actual reports for accuracy and reasonableness. Okay, the only thing on here that I don't think we've talked a ton about is segregation of duties. Does anybody have any questions on that? Again, comes down to initiate, approve, record. Is there a difference between segregation of duties and separation of duties? No. I just was taught segregation, so that's the one I usually go with. It's what I learned in my accounting class. Okay, for information and communication, allowable costs. Systems, programs capture, accurately process, timely report pertinent information. Does it help to get budget report 6 months after year end? Can you do anything about it at that point? No. Timely report pertinent information. Adequate source documents exist to support amounts and items reported. We have everything that shows the history behind why we wrote this check. We have a purchase order that was signed. We have bids if necessary. We have a receiving report. We have a grant that shows this is an allowable cost. Somebody knowledgeable has reviewed and agreed that this is exactly what we were talking about when we put the budget together. And we've written a check timely. IT security. Y'all, I can't even tell you how important this can be, particularly number 4. Access rights are managed to include timely revocation of rights. Why is that important? Y'all heard of ransomware? I'm not going to ask if anybody's had a ransomware attack, but I am going to say A ton of organizations have. I live just outside the city of Tulsa, and they got hit with the ransomware that shut down their online payment system for a couple of months, I think. I mean, of all places to target, the city of Tulsa. Not only that, but any personal information for people receiving tickets got hacked. So they've got names, addresses, driver's license numbers, all of that stuff. How do you protect your organization from these types of hacks? Firewall, offsite backup, knowledgeable personnel. You can't download stuff. Only IT can download stuff. Remember when we talked about checking the software for iPads and apps on cell phones and stuff? This is one of the reasons. Somebody downloaded a game, the game's full of ransomware. They update the iPad as they're downloading inventory or inspection information into the system, and boom, you're infected. Access rights managed to include timely revocation. This is another workplace where I could tell stories all day. What does that mean? I mean, basic, what does this mean? When you fire somebody, make sure you kill their password and their access. Like while they're in being terminated, even if they quit, make sure you terminate immediately. Why? Oh, they can, and depending on them, they will. I mean, not everybody's going to. Most people are just going to take their box and their stuff and leave quietly. Some people are going to try and delete the entire database. Some people are going to try and dial in from their home and download some kind of software that shouldn't be there. It's happened. Make sure you stay on top of it. Relevant information communicated and delivered to employees responsible for compliance in a timely manner. If there's a regulation change, you're letting the people involved know quickly. There's a policy change. You're going to make sure that whoever's involved is trained and up to speed as quickly as possible. Monitoring components. Again, board council review and address findings in self-monitoring in the single audit. They make sure that they're addressed with the right people. And there's a follow-up on corrective action plans. What are the two most likely corrective actions you'll have if you have a material weakness? Most findings are addressed in one of two ways. Either the people who are doing the job do not know how to do it properly, and they need to be trained, or we didn't set our system up correctly and we need a policy change. Okay, almost everything comes down to one of those two. Questions, comments, statements on that? Compliance on major programs. Compliance supplement, annual document. This document serves to identify the compliance requirements that your funding agency expects to be tested as part of the audit. Auditors use the compliance supplement as the primary tool in determining compliance requirements on programs undergoing single audit. Auditors are required to use the compliance supplement as part of their compliance testing. It's not optional. As we stated earlier, this information is publicly available. So if you're ever curious as to what is going to really get hit during the audit testing, go look. "12 types of compliance requirements in total. They all basically apply, but HUD has determined that only 6 of them are material. Okay, why is cash management not really tested? Why do we not test cash management for NAHASDA? Shouldn't be any cash. Shouldn't be grant money sitting around. Comes in, goes right out. Why isn't period of performance tested? Because the grant doesn't end. At this point, it's an automatic carry forward. So what is there to test? Why isn't program income tested? And why does HUD not expect program income to be tested for compliance? Because it doesn't have the same restrictions. I mean, it's not grant money now. So yeah, it's minimal. The requirements on it are minimal. And it's not something that you are required to spend prior to using the HUD funds. For a lot of grants, program income is a material requirement because they do earn program income and they do have to spend it first. Yeah, we don't care. Yep. Question. You get approved as an investment tribe. Now, interest revenue earned on investments from grant money is not program income. You have to treat it just like grant revenue. But if your total program income is under 25,000, then it can be recorded as non-program. But that's the total program income. Again, there's a new PIH notice that I was looking at last night because I am a nerd. And there's no, total program income outside of grant money received has to be over 25,000 to have to worry about program income. When you're looking at investment, that money has to be used. If it's grant fund drawdown in advance, any income earned is treated just like grant money. So it's not even program income. And we were debating yesterday what the period of investment is, and you can only invest for up to 5 years. That was in the notice also. I can't tell. Have I answered your question or have I danced around it? For those of you watching at home, we've got two completely separate issues here. Interest money earned on grant funds invested goes directly to supplemental grant money. If you are earning program income and the total in things like rent, if the total amount of your program income earned during the year is less than $25,000 in total for the IHBG program, then you do not have to separate it as program versus non-program. You can throw it all in non-program and treat it accordingly. Did that help? Okay. Okay. Linda, did that help or did it make it more confusing? Oh, okay. So you're good. All right. All right. Activities allowable and unallowable. We just looked at this when we looked at the compliance supplement. Auditor is going to test whether the activities for the fiscal year are eligible activities under NAHASDA. Everything that we put in our IHP has to be approved by NAHASDA in the first place and has to tie somehow to Section 202, which lists eligible activities. First is always the provision for operations and maintenance of 37 Act units. Second is development, including all costs involved in developing housing, whether you're purchasing complete units, whether you are contracting to build a development, however you're doing it. Housing services, basic housing services that include inspections, housing management, all the stuff we do on a daily basis, including determining eligibility, crime prevention and safety, which would involve, wide variety of things, speed bumps, fencing. How many of you have neighborhood watch programs in your housing? Has anybody done that? Any cameras? If you have law enforcement patrolling, all of those things are crime prevention and safety. Model activity. You've got tribal public safety nearby and they patrol. Okay, you've got cameras and patrol. Yeah, there's a lot of different ways to address that, and it depends on what works for you. Very simply. What's a model activity? Model activity is something that doesn't fit neatly above, but supports the housing program and is an allowable activity if HUD approves. Examples of model activities include, how many of you have a maintenance warehouse? That was a model. If that was built with grant funds, it was model activity. Community centers are model activities. Playgrounds, boys and girls clubs, all of those things can fall in model activity. And there's a large, I mean, if you can think of it and identify how it's supporting the provision of providing low income housing to low income Native Americans, you can probably do it. Not even going to get into the reserve accounts because frankly, nobody's doing that. Everybody's spending their money. Auditors will test that the tribe TDHE does not use IHBG money for property taxes. Does anybody have housing that is not on trust land? Do you have housing that's on fee land? Do you have a local cooperative agreement in place so that you agree to pay a flat rate per year, and in return, the city or county, whoever the tax body is, agrees not to charge taxes and also agrees that they will continue to provide, you know, fire, police, all of those fine things. You have to attempt to get the local cooperative agreement in place. This is only going to come into play if this unit would normally be paying property taxes, but is not because the tribe owns it. And the reason it's important is so that, you know, if this unit conveys and the person down the road chooses to sell it, they don't get hit with back taxes. Is anybody familiar with this? Again, it's something we, yeah, you're welcome. It's something we see a lot in Oklahoma because So much of everything is VLANT. If none of your housing is off reservation, it's not going to be an issue. Okay, we're also going to test to ensure that all your costs are allowable. We've talked about the specific NAHASDA requirements on depreciation, cost of housing. We've talked about fines, penalties, damages. We've talked about consultants. How are your auditors going to test these things? What specific activities will they do? If I were doing it, I would probably first ask for, I would have looked at your trial balance and seen how much you had in consultants or professional fees. And if those amounts were significant, I'd probably request the general ledger so I could see the detail, who got paid, why were they getting paid, and verify that the procurement was done properly and that everything was done in an appropriate manner. Do you see an issue with how the auditors are supposed to test these professional service agreements, but they are working under professional service agreements? Is there a conflict there? Every time. What's the conflict if there's a new auditor testing the old auditor? There you go. They know how much you paid them, so they know if they should ask for more money next year. Yeah, it is a conflict. It's just built into the system. Haven't figured out a way around it yet. The main thing I would say is make sure that if you have a new auditor, have your self-monitoring review that procurement to make sure it was done within rules. Okay, eligibility. Must have written policies governing eligibility and admission of occupancy for families for housing assisted with IHBG funds that serve low-income families, non-low-income families, non-low-income families whose housing needs cannot be met without assistance and meets the essential, and law enforcement. Do you have in your policies something that addresses each of these? If you're not admissions and occupancy, you may have no idea. Make sure that these policies exist. Procurement, suspension, debarment. Have to do Indian preference. There is only one exception to Indian preference in procurement. and that is de minimis procurement. Okay. This is weird. Let's just be very clear. De minimis is weird. Before the limit under 2 CFR 200 was raised to $10,000, HUD had a limit of $5,000 for a micro purchase. Okay, that has not been removed. Still sitting there in the regs. So you can theoretically spend up to $5,000 in aggregate with a vendor, and it is not required. You're not required to do anything other than verify that the price is reasonable and that they are not debarred. Okay. Where the problem comes in is that now by federal statute, you can have a micro purchase of 5,000 to 10,000. Okay, anything below 10,000 is can be a micro purchase. You're required to do Indian preference if you're using the 10,000 and you're using de minimis. Anything that falls between 5 and 10,000 in aggregate has to have Indian preference. This is a little confusing. Yeah, it is. What are your options? Use the de minimis and have a note in there that anything between 5 and 10,000 has to have Indian preference. You can set your micro purchase limit at $5,000, follow the de minimis rules. Or you can set your micro purchase limit at $10,000 and just do Indian preference on all micro purchases. My personal preference is C, just set it at 10,000, do Indian preference for everything. The only reason I suggest that is because it saves the additional work of dealing with procurements over 5,000 but below 10,000, and it establishes the same standards across the board, so we're not having to wonder, are we required to do Indian preference here or not? Just say we're going to do it on everyone, and you're covered. Questions? 100%, this is something that ONAP will look at when they're doing your monitoring. Make sure that you are following whatever policy you have in place. Is anyone using the 5,000 de minimis? Okay, good. Don't. Oh, you are using it? Craig, have you talked to your board or your council about raising it to the 10,000? Yes. Okay. Make sure when you set up your policy that you address Indian preference, either for everything below the 10,000 or for everything between 5,001 and 10,000. You are welcome. And I say that because Indian preference in procurement can have a lot of findings because it's kind of vague. So making sure that you've got the rules in place and that you're following your actual policy becomes a very big deal. There are a lot of findings on Indian preference and procurement. The biggest finding is that in aggregate piece. I know we've got a few slides on, well, I guess we're in it, so we might as well talk about it. When you start talking about procurement rules, Indian preference applies to all methods of procurement except de minimis. What does that mean? I mean, it's real easy when we're going out for bid. We know we have to include the statement that Indian preference applies. What if it's a small purchase? What if it's a sole source? Does Indian preference apply? Well, I just said Indian preference applies to all methods, so yes. How do you address Indian preference with sole source? You tell them the Indian preference applies to this procurement. Is it your responsibility to make sure they get Indian preference? It's their responsibility to ask for it. It's your responsibility to tell them it applies. Same with a small purchase or a micro purchase. Indian preference applies to this procurement. If they don't ask anything, okay, you've done what you're supposed to do. If they ask, then you provide them with the form or other information on how they would get Indian preference. Does that make sense? Yes, no, kind of. Does it make sense to anybody? Okay, well, Monica's on it. So's Angela. All right, I'm going to assume you're each representing 10 people in here. Okay, you are required to use federal supply sources when it makes sense. If it's going to save you money and time, you have to use federal supply sources. If it's not, you don't. Here's the thing that really surprised me. You kind of make the assumption that using federal supply sources like GSA, that it's going to be cheaper and save you money. That is not always the case. Sometimes it can save you a ton of money. I don't remember which federal agency replaced their fleet right before the pandemic shutdown started. There were some great vehicle deals at that point. I mean, you could get an SUV with 20,000 miles on it for just ridiculously cheap. Shop around, use it if it makes sense. Do not use it if it doesn't. Okay, we're going to do a relatively quick walkthrough on these procurement general standards. General procurement standards are the standards in 2 CFR 200-318, and they apply to all procurements. Okay, these are not based on the type, these are everything. Step 1, you must have written procurement procedures. Must conform to federal, state, local, tribal laws and regulations. State, depends on where you are and what it is. Must ensure contractors perform in accordance with the contract or purchase order. You're required to do contract administration for your procurement. You can't just issue the procurement and say, bye. You're actually required now to have follow-up to ensure they complied with the requirements. You're required to evaluate their performance. Why is that such a big deal? It's such a big deal because one of the requirements we're going to discuss is that contractors have to be responsive and responsible. If they do a crappy job, you document it, you no longer have to do business with them, like ever. You can debar a contractor from doing business with your tribe. In addition, they got to follow whatever rules are in that contract. Because you're using grant money, there are multiple clauses that need to be included that you have to prove. Davis-Bacon is involved. That's a big one. You have to verify that they're paying the appropriate wage rates. If it is a contract for less than, I don't remember how much, but do we have termination for cause for convenience? What about, how do we address change orders? Contract said that we have to do an inspection at each particular step in the construction process, and they closed up the wall before we had time to inspect. Has that ever happened to you? I actually have had it happen to a few tribes I've worked with. They wanted to do plumbing and wiring inspection prior to them completing the walls. Contractor got on a roll, finished out the walls. Tribe came in, made them knock them down so they could look. There is a conflict of interest provision in the general procurement standards. Okay, this is the minimum in procurement. This is not the same. We don't have to do public disclosure and get HUD approval if we have a conflict of interest in procurement. What do we have to do? if there's a conflict of interest in procurement. Okay, I want you to look at this. I'm going to give you an example. My ex-husband does computers. Okay, he provides backup services, hardware, software support. Okay, I'm the executive director. We are going to do, somebody went to class and now we've got to upgrade our backup procedures, our offsite backup, and we're going to upgrade our software to help protect against ransomware and other issues. He's bid on it. Do I have a conflict of interest? My ex-husband. Is he a member of my immediate family? Oh yeah, we're definitely not related. And if there is a conflict, I am required to step out, as Craig said. I got to recuse myself completely. What we're trying to establish is, do I have a conflict? Nicole's already saying yes, even though we're not technically related. Why? We're not immediate family. I have no financial or other interest in or tangible personal benefit from him getting this contract. I don't have a relationship. We have no personal relationship. Our son is over 18. Monica's saying I have an apparent conflict of interest. Huh. So just because I don't have a real conflict of interest, I mean, none of this, there's no immediate family, no financial or other interest in or tangible personal benefit from this. But it sure looks like I might have a conflict, according to Monica. Anybody else want to agree with that or not? I think we've established I do not have a real conflict of interest. Do I have an apparent conflict of interest? Man, y'all are feeling this appearance of evil. Yeah, I definitely have an apparent conflict of interest. What if I wanted to work against him? Even if he was the most qualified with the best price, and I was like, yeah, you don't want to hire him. Is that a conflict? Absolutely. Yeah, I want nothing to do with it. I am going to recuse myself from the entire process. Can his firm get the contract? Sure. If they do, what's the rule for my participation? I've already stepped out, so I had nothing to do with the selection or award. What about the administration? I'm the executive director, so normally I'm reviewing invoices, correct? I have to do more than just disclose. I have to put in writing that somebody else is going to handle the administration on this contract. I am 100% not going to get involved in any of this. Can a tribal council member also be a general contractor overseeing weatherization and rehab projects for HUD? Is it their company? Are they acting as the general contractor? I guess that's where we start. Can they be a general contractor and do the oversight? Technically, they can be a general contractor, but not, they're just doing the contract administration. Okay. Whereas, is this person actually getting paid for this job? Is he, who's he overseeing for? Is he overseeing for his own company and getting checked? He gets 15% of the total cost. No. Conflict of interest plus, it says specifically that any an officer of the organization cannot also be a contractor. That's in the allowable cost principle section. So if he's a council person, he's an officer of the organization. If you need me to find the specific guidance, I'm pretty sure, I know it's somewhere in the PowerPoint and the slide deck that we've gone through, but I can probably find that specific documentation. Okay, I lose everything in chat at the end of the day. So you will need to email me and I will be happy to find that info for you. Did you write down my email address? And this is true for everybody. I'm not playing favorites. Yeah. Do you have my email? I can indeed. And do not hesitate. Don't think it's a dumb question. If it's something I know off the top of my head, I can save you a lot of time looking for it. Okay. So does this make sense? Okay, program specific requirements. We've talked about the $5,000. Drives me nuts, but it is a thing. Not a fan, but if you have a $10,000 micro purchase limit, this is up to $10,000 in aggregate. Okay, if you're going to screw up procurement, it's going to be that you have made multiple procurements, each of which was well under 10,000. But when you add them up, when you look at your vendor list, your vendor detail for the year, you actually spent $25,000 with this contractor and you never got any bids. You've treated a small purchase as a micro purchase and you were wrong to do that. Okay, does that make sense? 100% the most common procurement finding. Not even close. So how do you avoid this happening to you? First, and my personal favorite way to address this, the regulations specifically say if you have multiple contractors who can do the job, you should spread out the micro purchases equitably among them. Why is that? Why should that be your first option? Think about competition. Do you always have plenty of people who are competing for when you go out for bid? I mean, you have so many bidders that you don't know what to do, right? Yeah, that doesn't happen. If you're spreading the money around to multiple qualified vendors, when you do have to get quotes, you've got a built-in group that are more likely to be interested because they know they've got a decent chance of getting it. What you don't want to have is you always use the same person every single time, so everybody else quits bidding. All that's required for micro purchase is that the cost is reasonable. Okay. So if you're doing micro purchases, you need to monitor that information and make sure that you are not over $10,000 to that bidder for basically the same thing over and over. The other option, and I've got quite a few people who are doing this, is they just always get two quotes for everything. So how are you all addressing this? Because it is an issue. Every time it's an issue. Is anybody doing the two quotes for everything? Okay. You're getting 3 quotes for 5,000, anything 5,000 and over. Okay. Yeah, just make sure that you've documented Indian preference was used. Yeah, they were notified of Indian preference. Yeah, is that a perfectly reasonable way to address it? Yes. What's the most reasonable way to address it? The method that works for you. Okay, so it's 10,000 in aggregate, not per purchase. Yeah, look at your policy. Whatever's working for you is what you should keep doing. For small purchases, which is considered anything between 10,000 to 250,000, we award to the lowest responsible bidder, and we have to have at least 2 responsible quotes. That's the regulation. A lot of people have 3 quotes in their policy. Somewhere along the line, they made a decision that The best way for us to get at least 2 responsible was to get 3. Okay, that's fine. You can do that. Sealed bidding is required if it's over 250,000 and we can take it down to cost. We do sealed bids for construction. Why? Because we can detail exactly what we want. We want a building this big with this number of bathrooms, this square footage, this, you know, whatever the case may be. You're detailing it to exactly what you want, and then you're going out for bid to find out what it will cost you to get it. Whereas with a competitive proposal, we are looking at price and other factors. You can do a sealed bid or a competitive proposal for things that are less than 250,000. You have to do it if it's over 250. And then the non-competitive, the only time you can do non-competitive are it's an emergency. We have attempted to get competition and nobody's bidding, or there's literally only one company that provides whatever the thing is, so we don't have a choice, or HUD has already said, yeah, you can sole source this. Do you have any questions on that? If you do a non-competitive procurement, you make darn sure you detail what the reason was. Why couldn't you go out and go for bid? Why couldn't you why couldn't you purchase this using competitive measures? Questions on that? Okay, we have talked about this thing. Micro purchase versus de minimis. Do you have any questions? Hey, performance reporting. I think we might be able to get through performance reporting before lunch. We're going to try. Auditors will test your APR for completeness, accuracy, and timeliness. Did you fill it all out? Is it properly supported by your financial statements? Does it tie to the SF 425? And was it submitted timely? You know, the bad news now is if you do not submit your reports timely, there's only one report getting submitted. So that's 100% failure rate, and that's going to be a finding. Make sure you submit on time. I don't think there are any waivers still in effect for any reports. I know we're coming off of 2 years where everything was on waiver. I am not aware of any existing waivers right now, so make sure you're getting everything in on time. If you have a 12/31 year end, then you better have your IHP in what, next week? Again, same situation. We're going to test the SF 425. Was it submitted timely? Did you include all of the pieces? And is it accurate? And you can tie back to the financial statements and the APR. The answer is no. There's only one submitted. You got a finding. Section 3. How many of you have something in your policy that says you will comply with Section 3 requirements in procurement? Okay, go look for this in your policy. If it's in your policy, you have to do it, even though it is no longer required. Finally, everyone agrees that the entire process of doing Indian preference and awarding based on Indian preference is more than adequate to meet the Section 3 requirements. Does anybody know what Section 3 is even? Section 3 is was a procurement requirement on construction. If the cost of construction is more than $200,000, the contractor is required to the best of their ability to hire and train low and very low income persons living within that area. If we're doing Indian preference already, it's already getting picked up there. So yeah, get rid of it. Special test wages and provisions. Oh Lord, here we go again. Does anybody have a tribally determined wage rate? Okay, if you do not, your contracts that include more than $2,000 of labor need to have a clause in there that Davis-Bacon wage rates will be followed. For particular classes of labor, carpenters, electricians, what are they called? I can't remember all of the sections. There's a local wage rate that has to apply. Masons, thank you. Yeah, there's tons of different categories. There's a minimum wage rate that they must be paid. You can adopt a tribally determined wage rate. You can also use the HUD determined prevailing wage rates to pay maintenance. You have to do this, you have to document it, and you have to show through testing that you have verified that the contractor complied. So what do you have to do? And this is more on construction. What are you required to do? They're required to give you certified payroll, and you're required to verify the category and the prevailing wage. Was it paid? Then you also have a requirement to interview the laborers and verify that they received at least that rate. Okay, if there is a failure, you call your attorney, because it has to be reported to the Department of Labor. Who's that contractor's in trouble. Okay, any questions on that? Environmental. You have to have an environmental for NAHASDA assisted activities. The environmental may be as simple as verifying that it's not in a coastal area, that it's not in an airport runway clear zone, that it's not in a flood zone. This applies. Look at this. Before the recipient can acquire, rehab, convert, lease, or repair, or commit HUD or local funds used in conjunction with NAHASDA activities. So technically, providing rental assistance has to have categorically excluded, converting to exempt environmental. You make darn sure if you are touching, if you're changing anything, if you're putting a shovel in the ground, make darn sure you've got the environmental under control. Okay, because you will be paying money back. This is the summary level of environmental review and documentation required. I want you to look at some of these exempt. Even though it's exempt, you still have to do paperwork. Plans and strategies, information and financial services, employment, crime prevention, child care, inspection, purchasing insurance, technical assistance and training. If you're paying for technical assistance and training, there should be a statement that you're in compliance with the Flood Insurance Program, Coastal Barrier Resource Act, runway clear zones. I'm not having an environmental impact on you. Has to be signed by a tribal official. What tribal official signs it? Chief, council chair, whoever that person is, should sign your environmentals. How long are environmentals good? Do we have to do a new one every year? I mean, should we do an environmental every year? Actually, you do not have to do it annually. The assumption is they're good for at least 5 years. Yep. So for all of these exempt activities, you make a list of them. Here's the paperwork. Here's the date it was done. Chair sign. Here's my file. You can do it based on the entire category and not individual. Now, when you get into acquisition, repair, construction, rehab, any of that, you will need additional information, and you will have to do it by project. Okay, does that make sense to everybody? I'm going to hit the investments because this is the last of the special tests and provisions, and then this will give us a nice clean stop place. If you are an investment approved tribe, you have to have written approval to show that. You have to keep the grant funds invested separate from program income, non-program income, other grant funds. Okay, you are required to collateralize. You have very restricted ability to invest. You can't play the stock market with grant money. Okay, you have to invest in federally backed securities. This is why a lot of people do it as money market, and then ensure that they have collateralization agreements in place. Do you know what a collateralization agreement is? Has anybody dealt with collateralization agreements? A collateralization agreement is basically if you have federal funds in a bank, okay, you've got FDIC insurance up to $250,000 for everything that you have in there. If it is grant money, you then have to have whatever you have in there over the 250,000, you have to have it backed and secured, federally backed securities. Cannot do bank stock. Banks will want to give you their bank certificates. That's not good enough. They have to agree to have additional insurance to protect that money you have. The bank goes under, you have some method of getting your grant money back. And why? Because it's not your money yet. It's not your money officially until you spend it. Who wants to pause and take a lunch break or a meal break? It may be a brunch break, I don't know. Okay, I'm looking at what we've got left. Let's do, is everybody okay with 45 minutes? That way I guarantee you'll be out on time with all info covered. Decent, I'd say it's probably, there's a decent possibility we might even finish. Okay, you need to leave at 1:45. Then you shoot me an email for any questions you have on material that doesn't get covered, and I'll make sure you get that info. You are very welcome. All right, Elizabeth, the timekeeper.
Yes, ma'am.
We're taking a 45. So what?
Eastern, 12:50 Eastern.
All right.
All right.
Okay.
Thanks.
Elizabeth says 12:50 Eastern. Let's do it. See you in 45.
All right.
Okay. Does anybody have any questions before we move into everybody's favorite useful life binding commitments? Okay, how many of you have some familiarity with useful life binding commitments? To be very clear, this is not at all related to asset life, okay? This has nothing to do with our fixed assets. This has everything to do with housing units that have grant money used to rehab them, to build them, whatever the case may be. You are required in your IHP APR to identify that you have a useful life period and you are tracking that for your units. By statute, 37 Act units are not included in this. But basically, if you have, as it says down here, constructed, acquired, or rehabbed a unit with IHBG funds during the period, you have to have a useful life. You may be required to have a binding commitment. Useful life is based on how much money did you put into the unit. And the binding commitment basically says this is how long the unit must be used for affordable housing based on that limit. If you do down payment assistance, if you do homeowner rehab, if you are building NAHASDA lease purchase units, all of this applies. Okay. It's usually set up to where any assistance less than $5,000 is 6 months. If it's more than 5,000, let's say 5,000 to 25,000, it may be a 5-year useful life. Can go up to new construction acquisition is usually 20 or 25 years. So what does that mean to you? Here's your example. We assisted homeowner rehab. We assisted $20,000 to a participant, which triggered a 5-year useful life period. 3 years in, this person wants to sell the unit to somebody who is not low income. Can they do that? They can, but they're paying back at least some of the assistance received, if not all. It depends on how you've got that agreement written. When it says it has to be used for affordable housing, it means that low-income persons must continue to live in the unit. The person who received the assistance is by default a low-income person, or they would not have received it. This is a pretty simple procedure, as long as you remember the reason is to verify that people are not profiting off of grant money. We're not going in, we're not fixing up their house, and then they're not turning around and selling it at a profit. You have to track every unit that has a useful life, when it started, how much money, and how much is left on that binding commitment. This will be checked. I guarantee your monitoring will check it. Kind of hit or miss on how much the auditors will check. Is everybody comfortable with this? Bonus, as part of having an investment in the property that has this binding commitment, they have to prove that they still have insurance on the unit. Because the grant money has to be protected. Does that make sense? Does everybody have a method for tracking useful life? Can you track with an Excel spreadsheet? Are you tracking your useful life and binding commitments through your fixed asset software? That's okay. Now, I was sitting here thinking, you know, I bet you could do that. How is everybody doing it? You just throwing it out there and hoping for the best, or what's your system? Is there a way to track it in doorways or HDS? I don't know anybody who's doing it that way, which is why I'm asking. Okay, most of the people I know who are doing this, and you're all required, are usually doing it through an Excel spreadsheet. Don't love it, don't hate it. It works. If you come up with a different way to do it, I'd love to hear about it. Okay, insurance. Owned, operated, or assisted with IHBG funds. Not required if the grant assistance is less than 5,000 or there is no risk of loss. Can't think of any time where there would be no risk of loss. So it's going to be less than 5,000. Note, it is owned, operated, or assisted. Questions on that? We've already reviewed the compliance requirements. We can look at them again if it brings you any joy, but I feel like we've covered it pretty well. Does anybody want to look at the compliance supplement again? Nobody answers. I'm going to start pulling it up. There we go. Yep, we're good. Okay, so let's talk about your responsibilities on reporting findings, corrective actions, and resolutions. Yeah, nobody ever really wants to look at those boilerplate grant type documents again. Y'all seem pretty over it. Okay. Auditee's responsibility for audit findings. That would be you. You are responsible for all follow-up and all corrective actions on all audit findings. You are responsible for preparing the summary schedule of prior audit findings, which includes reporting on the status of all findings, including schedule of findings and question costs. You have to use whatever reference numbers the auditor used to identify the finding in the first place. We have to prepare a corrective action plan for current year findings. Correction plan and summary schedule must include all findings related to financial statements that are required to be reported. There's a financial statement finding, you have to address it. You can't just say, oh, that's not compliance. You are expected to follow up in a prompt manner. Okay. So, first question is about the summary schedule. If you had findings in your audit report for the prior year, you have to do a schedule that lists them out, what corrective action was promised in the report, what corrective actions you've taken, and is it resolved or not. If you don't have any findings, there's no summary schedule to do. Here's the thing, your auditors will look at this and are going to verify, did you tell us correctly? Is this resolved? And if the answer is no, you got a brand new finding. So let's talk a little bit about findings and corrective actions. Has anybody had a dispute with their auditor about a finding? Have you ever gotten written up for something that you think is not true? What happens? I mean, who wins? Yeah, the first thing I would do if I had an audit finding written up that I didn't agree with, I'd go to ONAP. I would call my regional office and say, we got a finding on this and I don't think they know what they're talking about. Let me describe it to you. Yeah, you always want to discuss it. Oh, I've had plenty of times where it was not resolved in favor of the tribe. Again, sometimes auditors are just, nope, that's the way it is. And they're wrong. If you do not agree with the finding, do not put in the schedule of findings and question costs that management agrees with the finding. We disagree because based on NAHASDA 24 CFR 1000-502, we had an option to do it this way and we did. Under 24 CFR 1026, it says that this is exempt from 2 CFR 200 compliance, and we stand by it. Okay, don't just take it. Don't just agree and take it. Definitely discuss with the audit team. Here's why I don't think this is right. Here's the guidance that I'm relying on to tell you I don't think that what you said is correct. Absolutely take it and keep taking it up the chain. And 100% in the audit report say we disagree with this finding and here's why. What happens then? How doesn't come back with anything after reviewing your audit report if they don't issue or discuss any additional follow-up? You can assume it's been resolved. But yeah, I will 100% drag home nap into it. Especially if they're the ones who told me to do it that way. Again, this is why there's a disclaimer at the start of this whole training that says, these are my opinions. This is why I give you regulatory citation. Here's what I think. Here's what I'm basing that on. Any questions? Is anybody just having disputes on anything? I feel like Treasury is going to probably have some finding disputes just because the requirements were so broad. If you do have a finding on it, make sure you are ready to cite Treasury sources that say, nope. Has anybody had that happen yet that's willing to talk about it? I'm kind of waiting on that, and I know there were some disputes with some of the early CARES Act because you could assist people who weren't even tribal members. So I think it's been an adventure. Either way, you are required to follow up on any findings that are noted, and you're supposed to do it quickly because this is saying you've got a flaw in your system and you need to plug that hole before something really bad happens. Auditee is responsible. Again, if the audit finding is fully corrected, make a note. If it's partially corrected, describe the reasons why it's not finished and what you're going to do about it. And if the audit finding is no longer valid, state the reasons. When would a finding no longer be valid? I mean, is that even a thing? And of course it is. When is it no longer valid? If the audit is reviewed by the funding agency and they do not feel it's necessary to follow up on this finding, or they specifically tell you Don't worry about it. That finding is no longer valid. If the regulations change, that can make a finding no longer valid. Here's what the reg says, just for you know. Okay, when an auditee believes the findings are no longer valid or do not warrant further action, the reasons for this position must be described in the summary schedule. A valid reason for considering an audit finding as not warranting further action is that all of the following have occurred. 2 years have passed since the report in which the finding occurred was submitted. The agency is not currently following up with the auditee on the finding. Management decision was not issued. Does that make sense to everybody? I'm picking on Treasury a lot because I know most of you are dealing with it or have dealt with it. So let's say we had a finding on eligibility documentation for emergency rental assistance that they did not feel that, or they feel like we should have included additional information to prove eligibility. Grant's no longer happening. What are you going to do? I mean, how do you fix something that's no longer happening? Make a note, you move on. You are responsible for the corrective action plan. You are the ones who should write the corrective action plan in a document separate from the audit's findings to include in the current year report. Do not let your auditors write your corrective action plan. Number one, that's an independence violation. Number two, it's your job to make sure your internal control system is working. Therefore, it's your job to decide how you're going to plug that hole that was identified. Okay, questions on that? Notice I'm not asking who has their auditor writing their corrective action plan. Don't want to know. Just don't do it. Okay, here's what has to be included in the corrective action. Who are you? Who is responsible for the corrective action? Name, address, contact information. Who is that normally? Yeah, could be the tribal administrator, maybe responsible. Ultimately, council is responsible, but they can delegate the responsibility to management. If I'm writing a corrective action for self-monitoring, I usually assume that the board and management will be responsible. Why am I writing a corrective action for self-monitoring? Because it's not an audit and I'm not required to be independent. Okay, you include the finding number in the title, and that's included in the findings question cost. Description of the finding and recommend recommendations. NAHASDA funds may have been used for unallowable activities. If they were used for unallowable activities, what do we know? We know two things. We have a material weakness and we have disallowed costs. If NAHASDA funds may have been used, means that we did not have adequate supporting documentation to support our claim. Therefore, we may have question costs, which will be handled at a higher level. Probably a significant deficiency and not a material weakness. Okay, does that make sense to everyone? I want you to understand what you're looking at when you look at the schedule of findings. It's a lot of boilerplate legalese. So if you've got questions, ask. Okay, do you agree with the finding? And 9 times out of 10, the answer is yes. Yeah, we know. Here's what we're going to do. And if it's a finding that came up that you've already addressed, then how do you respond? You tell them detected as part of self-monitoring, and here's what we did to fix it. We believe the actions that we have taken, yes, it existed at year end. We're not arguing that, but we are saying that we also caught it. We fixed it. Here's what we did. Let's all move on. You have to include the date in which you expect this to be resolved. We need to make a change to our policy. We expect it to be resolved by March 31st. We are going to offer additional training to staff. We expect that to be complete by June 30th. We've requested ONAP assistance on this manner, and it will be completed sometime during the next fiscal year. Make sense? Who in here is responsible for the follow-up on these things? Yeah. Management's got to make sure it got fixed, and it's council's responsibility to look over their shoulders and verify. What is the auditor's responsibility in addressing findings and question costs? They are required to report significant deficiencies and material weaknesses in internal control over major programs and significant instances of abuse relating to major programs. Material non-compliance with provisions of the awards. Known and likely question costs greater than $25,000 for a type of compliance requirement for a major program. known question costs over 25,000 for a non-major program. Why did we issue something other than an unmodified opinion? We're going for the unmodified opinion because that means that the standard language in the opinion hasn't been changed in any way. A modified opinion means that we've had to add an except for paragraph. If the auditor determines that there is known or likely fraud affecting the award, the auditor is not required to report it publicly, but they are required to report it. Do you know how that flow works? If an auditor finds fraud that affects the federal award, they have to notify management unless management is involved. Okay. In that case, either way, they're going to have to notify counsel. It is counsel or the board's job to notify the funding agency. If they fail to do so, then the auditor is required to notify the funding agency. You don't want the auditor doing that because that means your board chose not to take any action. Fortunately, it doesn't happen a lot, but it does happen. With any luck, you'll never ever see it. Again, here's another finding that has to be reported. If the auditee's report on corrective action for prior year findings is not correct, that's a brand new finding. Questions on that? So what is a significant deficiency? And keep throwing these terms around: significant deficiency, material weakness. What is it? Deficiency in internal controls over compliance that is less severe than a material weakness, yet important enough to merit attention by those charged with governance. We had some lack of documentation on some invoices. Some invoices were not approved. Significant deficiency, yes. Could it be a material weakness? Might be. Was it a couple, or what? Do we have a consistent problem? If we were missing all of the approval signatures by the check signer, that would definitely, I'd call that a material weakness, because that's one of our steps in our internal control process that was not followed. Incomplete grant files. We're missing some of the required documentation. If there's no evidence of IHBG draws from ELOCs, how would that happen? How would you have no evidence of IHBG draws? Failed to print out the documentation, didn't keep the backup documents, or maybe we didn't do the draws. Revenue coded incorrectly. Yeah. Could all of these things have happened? Yeah. Do we, as the auditor, know for certain what happens? We might, but probably not. I think about, and I'm going to pick on admission and occupancy again. Let's say that you require tribal preference. In that case, should we have documentation from the tribe that this person is a tribal member? Either confirmation for membership or copy of their membership card. I mean, should that be in the file? Sure. Let's say it's not in there. Does that necessarily mean this person is ineligible? They may very well be eligible. On those types of things, what's usually the cause? Why would somebody not have their membership card, proof of membership in their file? They were just born. Well, then we've got a birth certificate. Yeah, they wouldn't have a tribal membership. Well, I know them, so I know they're tribal members. Okay, is the fact that the intake person knows them adequate documentation to prove eligibility? No. So what happens in that case? Do we have any reason to believe that there is a disallowed cost involved? No. The person did the verification, they just did not document the verification. Are we going to call it a significant deficiency or a material weakness? And it wasn't everybody. It's maybe 2 out of 10. Nicole's making it a deficiency. Two out of 10, that's 20%. I mean, could we make it a material weakness? You could. Am I going to? No. What's the corrective action? How are you going to fix this? How are you going to address this significant deficiency and proceed going forward? I mean, we already tried the whole ignoring it, maybe nobody will notice. Well, they were supposed to verify all the documents were in the files anyway. And because she knows them, she didn't do it. Because they didn't have it with them, and they were totally going to bring it back, and then, you know, they didn't. What are you gonna do? How are you gonna fix it? You have a second person review and sign off. I think that's reasonable. First thing I would do is do a little training refresher with the person who was not including that information. Second thing I would probably do would be put in a checklist. I'm not kidding when I tell you I love a checklist. As part of the second person reviewing and signing off, I would have them reviewing that checklist and spot checking and verifying. I would also have the person responsible go back through the files and make sure that that documentation is included. I want to inconvenience them. I don't want to fire them. And I never want to fire anybody, but I do want them to have to fix it and have it be kind of inconvenient for them. So it sticks that, oh yeah, this is why we had to do that. I would also test it on monitoring and make sure that it's been resolved. If it hasn't been resolved in our self-monitoring, now what are we going to do? They've had the training, we put in the checklist. Now what? And the correct answer is whatever your personnel policy says. You know, is it a written reprimand? Are we going to do some individual one-on-one counseling? Whatever works for you. But you've got to make sure that information is included. Okay, does that make sense? Is that an incomplete grant file? Yes. Is it likely that we had an ineligible person admitted into the program? No, it is not. So we're just going to fix it and move on. Questions, comments, anything on that? Has anybody had something like that happen? One of my personal favorites, and you'll like this one even better. Had someone that was doing the recertifications decide that everybody in the household had to resubmit their social security cards and driver's license and birth certificates all over again, like every year. Because, well, it's just like verifying eligibility. No, it's not. Does your social security number ever change? Yeah, no, it doesn't. So why should I have to provide my social security card, my unexpired driver's license, and my tribal membership card every time I did a recert? If I was already in the house. It's not like I'm a brand new person coming into the unit. I've been there for 20 years. You think she was popular? Don't make it more complicated than it has to be, okay? Don't waste your time dealing with the stuff you don't have to care about. Make darn sure you have the things that do matter completely verified. Okay, so what's a material weakness? It is a deficiency in the controls, in our internal controls, so that there's a reasonable possibility that a material misstatement, material non-compliance will happen and not be prevented or detected. Something is going to get into the system because we don't have a control over it, or we're not following our control over it, and we're not going to catch it. Activities and charges to the program were unallowed. We just allowed costs. Does that happen? Fortunately, not much, but yes. Do we sometimes have ineligible participants get in the program? Yes, we do. Lack of general ledger maintenance and monitoring. Since I've got all these finance people here, let's talk about that one. What is that saying? Lack of general ledger maintenance and monitoring. Yeah, there's no reconciliations, or reconciliations are being done, you know, at the end of, we're doing all reconciliations at year end instead of monthly. Financials are inaccurate, probably. Lack of general ledger maintenance and monitoring. No one is reviewing the GL, looking for orphan accounts, verifying that debits equal credits, making sure that all of our assets have debit balances and all of our liabilities have credit balances, asking questions if that's not the case. All of the accounts, we don't have any orphan accounts floating around. I've probably said that multiple times because that's a big issue. Lack of source documentation to support the amounts in the GL. Maybe we have the same vendor set up in multiple different manners. Why would that be a problem? I mean, they're a legit vendor. That's not the issue, but we have them in there. Maybe I know somebody had me in there 4 different ways. Why is that a problem? $10.99 nightmare. Yeah. Not only am I getting multiple 1099s for no good reason, there's a decent possibility that on at least some of those extra accounts, I'm not getting a 1099 because I was under the limit, which is another big fat mess as well. This is why you have to show some evidence that you are reviewing. Our policy says that we will review the general ledger monthly. We print out reports for the appropriate parties to review. We should have some documentation to show that that happened. You know, receipts, sign off from the person receiving it, initials that I have looked at this, and here were the questions I had. Some kind of documentation needs to exist that shows we did what our policy said. If it's not documented, it might as well have never happened, because you have to be able to prove it. Any questions on that? Is anybody getting paranoid about their own financial system as we're going through there? That's right, you do have an appointment. Linda, thank you. Let me reach out if you've got questions. So are you looking at all of this as we're going through and kind of doing a mental check on your own system? Saying, okay, yeah, we're doing that. I wonder if we're doing that. We might need to increase our stuff. Oh, Linda, are you already gone? Okay, well, she's gonna get,
No, no,
I'm
she's
here.
still
okay, you're gonna get a survey to complete on the training, so please pull it. Please fill it out when you get it.
I'll do that. Thank you so much again. I learned a lot, so I appreciate
Okay,
it.
good.
Thank
Yeah,
you.
reach out if you've got questions.
Okay, thank you.
Thank you. Yeah, I mean, this is meant not to terrify you. These things happen, they don't happen a lot. Material weaknesses honestly do not happen that often. Significant deficiencies, yeah. But material weaknesses in general just are not that frequent. And everything that you need to prevent them is within your control as an organization. Follow your policies. Make sure your policies include the right stuff. And then make sure that the staff using the policy understands how to put it in play. Any questions on material weaknesses? Yeah, Melissa, that's exactly what you should be doing. Kind of a mental checklist. Do we have that? How can we improve it? Okay, audit findings. Here's the information that has to be included. I'm a big fan of using this to describe any findings that you come up with in your own self-monitoring. Okay, the federal program, the specific award number, the criteria for the finding, the condition found, including facts supporting the deficiency, statement of cause, what happened, why is it a problem? All right, let's do a walkthrough. What do you want to have a finding on? Somebody give me a finding. You're welcome to unmute if you want. Okay. You leave it to me. Conflict of interest was identified in procuring off-site computer services. There was a conflict of interest, and the person participated in the procurement. This person's former husband, the executive director's former husband, accepted proposals from multiple people, including her former spouse, in which we believe is a conflict of interest that was not disclosed at the time. What are the facts? Facts are this person is the former spouse. The executive director was aware that they had a conflict of interest based on the regulations, 2 CFR 200, and our own policy. Yeah, didn't happen, didn't disclose it. I'm receiving the procurement. I knew it was my ex-husband. I decided that it was close enough since, you know, he's not my immediate family now. So it's no big deal. So I just went ahead and went on with it. And even though he was the low bidder, he did not get the procurement because I didn't want it. Is that a finding? Or he got the procurement at a higher rate, even though he was not the low bidder. Yeah, not chosen due to conflict. Either way, it has to be disclosed. It is a finding because it happened. And I made the decision to give the contract to somebody else. Did that violate our procurement policy? Yes. Did that violate 2 CFR 200? Yes. Did I mean to violate the policy? Yeah, I didn't mean to, but it doesn't matter because it's my job to follow it, which means I am the person who is responsible for saying, oops, I got a conflict, somebody else handled this. Yeah, it doesn't matter if it was accidental or intentional. What matters is a contract was awarded and it was not awarded in accordance with our documented procurement procedures. And it was awarded and not in compliance with 2 CFR 200. What was the cause? Cause was executive director failed to follow policy, and it wasn't detected until after the fact. What's the effect? We paid more for something than we had to. That's a finding. Okay, does that make sense to you? Do you see how this works? Yes, no, kind of, sort of. the afternoon of day 3 of training. We don't even care anymore. Just keep talking. Sandra says yes. Okay, the auditor has a responsibility to identify question costs, how it was computed. If there are known costs, we need to identify that as well. Based on the assistance number, everything's reported that way. Information to provide proper perspective for judging the prevalence and consequences. Was this particular procurement an isolated incident? Or have I been playing fast and loose with all of our procurement? What do you think? Isolated or system? And why does it matter? Doesn't matter. It looks like it was an isolated incident. And it looks like it was based on my poor interpretation of the rule. Is this going to be a significant deficiency or a material weakness? Either answer is correct, but tell me why. What do you think? Probably an isolated instance based on poor interpretation. Could be a system problem because I am the executive director in this scenario. So that could be an entire system being, that's management override, basically. Okay. So we've got that. If it's an isolated instance, I'm probably going to write it up as a significant deficiency. It's a one-time deal. It's a problem. It needs to be resolved, but it's a very specific situation. If it's a system problem, I'm almost always going to write it up as a material weakness because our system as a whole did not work as intended, which means there's a pretty good chance that we've got some problems in our system. Okay, that makes sense? Okay, is it a repeat finding? If it's a repeat finding, the finding number from the last audit will also be included to show, hi, we still haven't fixed it. Why are repeat findings bad? Why do I personally frown very strongly at repeat findings? What's the story on that? Yeah, there's a problem. You didn't do anything about it, which makes it kind of look like you don't really care. Please fix it. Please at least try to fix it, even if it doesn't work this time, at least you tried. Okay, recommendations to prevent further occurrences. What recommendations am I going to make? Review training and policy. Every audit finding in the schedule of finding and question costs has a reference number, and it's usually the audit year and then the number of findings. So it would go like 2021-01, 2021-02. We'll assume that you'll never have more than 2 findings, if even that. Is it possible to have no findings? Sure. Does that mean you're perfect? What does it mean if you don't have a finding? There was nothing that rose to the level of needing to be reported in the audit. Could also be that it just didn't get pulled. If you have no findings, I would hope you would have a pretty sturdy management letter that the auditor's writing to management saying, hey, here's some stuff that you need to fix before it gets to be a problem. It's not quite there. It's not bad enough we need to write it up, but it could get there. So be aware. Could the person who did not, could it be a situation where the person didn't include the 2 tribal membership IDs? Could it just have been, we chose not to write it up as a finding and we just put it in the management letter to council? Could we do that? Here's what has to be reported. I didn't include 2 membership cards because I know them. Yeah, I know I need to get it put in there and I will now. Oh, it wasn't a major program. Does it have to be included as a finding? If it doesn't meet these requirements right here, it does not have to be included as a finding. It may well be included as a finding. But again, remember when I said auditor judgment comes into play a lot? It's one of those times. So how many of you are familiar with the schedule of findings and question costs? Has anybody dealt with this? Have you seen it in your report? Yeah, this is just a blank form. And first section, summary of auditor's results from financial statement. So the first thing we're looking at is what type of auditor's report was issued on the financial statements. That's like the first page of your audit report. Did the auditor say presents fairly in all material respects? Or did it say presents fairly in all material respects except for? We're going to assume you had an unmodified opinion because frankly, the vast majority are unmodified. Did we have any findings on financial reporting? And if so, were they material weaknesses or significant deficiencies? Did we have any non-compliance material to the financial statements? Well, here's a quick answer for you. If you have non-compliance material to the financial statements noted, then you do not have an unmodified opinion. Okay? Can't have both. If we have a yes on that non-compliance material, there's no way we have an unmodified financial opinion, period. Is everybody clear on that? Okay, well, let's talk about the federal awards. Did we have a material weakness identified in our internal control over major programs? Question number one, can you have a material weakness and still have a clean opinion? Sure. Fairly stated in all material respects. A material weakness may be a lack of documentation in one particular area that we know did not have an impact on our overall compliance. We should have done this, but we didn't, but we will. And it did not mean that we assisted anybody who was not eligible. Frequently, we'll have significant deficiencies identified and still have a clean opinion. That's not unusual at all. Remember that the question being answered in the audit opinion is, did you comply in all material respects with the laws, regulations, and terms and conditions? As long as you did, you have a clean opinion. So what type of auditor's report did we issue? Question. Let's say you've got 3 major programs. Could you have a clean opinion on 2 of them and a qualified opinion on 1? Is that possible, or is it an all or nothing kind of deal? What do you think? When we're discussing compliance for major programs, say we have 3 major programs, could I have a clean opinion on 2 of the programs and a qualified opinion on the 3rd? Is that possible? Okay, look at this sample. We have ICDBG as a major program. We have IHBG as a major program. We have emergency rental assistance as a major program. We are unmodified on ICDBG and IHBG, but we had a qualified opinion on emergency assistance. Could that happen? Yeah. Could, and it's not horribly unusual for it to happen. Why am I assuming that if that was the case, that would be on the emergency rental assistance program and not community development block grant or the housing block grant? Number one, it's a high-risk program. Well, shouldn't it be easier to comply with loose requirements? It is a high-risk program. You're so close. What makes it a high-risk program other than the fact that Treasury said so? New program, new requirements, nobody's got experience with it. Built it as the money was being distributed. That's the very definition of being a high-risk program. ICDBG and IHBG are likely to be lower risk because we have experience dealing with those. We've dealt with this stuff before. There may be some areas we may have added some activities that might make it a little bit more risky, but in general, and we know those rules. We know what's required. We know those policies. We have experience in addressing these problems. So it is automatically going to be a lower risk than with emergency rental. Okay, see how that risk assessment comes into play? Did the auditee qualify as a low risk auditee? Yes or no? Why does that matter? Why does it matter whether you're a low risk auditee or not? To the auditor, why does that matter? From an audit standpoint, remember when we were talking about percentage of coverage that we had to audit at least 40% of the grant funds? Does everybody remember that? It was right before lunch, so. Okay. Yeah, if you're a low risk auditee, they only have to test 20% of your dollars. They still have to. No, you're not, because that's right. They do get to do less work because they don't have to test as much. If we had been looking at this as a low risk auditee, probably would have just had to test the NAHASDA portion and not anything else, because we only needed a 20% coverage. Okay, does that mean you can get a pretty good guesstimate as to what programs are going to get tested? When you look at your schedule of expenditures of federal awards, can you look at that and automatically have a fairly decent assessment of what's getting tested? You can. Any type A program that is not low risk has to be tested. And for every low risk type A program, we have to sub in a high risk type B. I mean, technically you could calculate what your major programs are going to be. You know, there's going to be a few issues that they may have different answers. Some things that are very subjective, experience, that kind of thing. It's hard to say equivocally that, well, we've got 3 years experience working with this program, so we're going to say it's lower risk. Your auditors may be looking at it as they have less than 5 years experience with this, so we're going to call it higher risk. But in general, you can get a pretty good feel. Questions on this? All right, let's talk about auditors' reports. Keep on trucking. Let's do it. Auditors' reports may be in the form of either combined or separate reports, must state that the audit was conducted in accordance with 2 CFR 200 subpart F and include an opinion or disclaimer of an opinion on the financial statements and an opinion or disclaimer on whether the schedule of expenditures of federal awards is fairly stated in all material respects in relation to the financial statements taken as a whole. 1 and 2 are almost always in the exact same report. The opinion on the CFA is usually paragraph at the end. 3, almost always separate. Internal report on internal control over financial reporting and compliance. There is not an opinion issued on internal control. They're giving you no assurances other than to say, we looked at it and here's what we found. You will get an opinion on compliance with the compliance requirements for each major program based on the compliance audit and a report on internal control over compliance. Again, no opinion on internal control. Just here's what we did and here's what we found. The last piece is the schedule of findings and question costs. I want to stress, you are getting an opinion from the auditor. Can you rely on that opinion? To an extent, yes. Is the auditor giving you a guarantee? Yeah, there's no guarantee. If your audit was done by a reputable firm and they have hit all of the requirements, that they're supposed to do in the audit, then it's a pretty safe bet it's probably correct. But there's always that chance that it's not. Even if they did it right, there's still a chance it's not. For whatever reason, when we set up the sample, it didn't pull the things that are messed up. It's not likely that that's going to happen, but it could. So everybody wants an unmodified opinion. Okay. You want the language to be unmodified with the standard report. This is an opinion expressed on the financial statements taken as a whole. Financial statements are presented in accordance with GAAP and are fairly presented in all material respects. Again, the vast majority of audit reports are unmodified. What's a modified opinion? The most common is a qualified opinion, which basically says the financial statements are presented fairly in all material respects except for this one particular account. So you did a great job on everything except fixed assets. Fixed asset didn't have an inventory. You hadn't done inspection. We can't find a building. We're missing a golf course. Yeah, those have happened. So it comes down to how big a deal is. Adverse opinion means the financial statements are not presented fairly in all material respects. Disclaimer of opinion means we don't know because we don't have enough information to give you an opinion. You don't want number 2 or number 3. Number 1's not that big a deal. Notice again, we're back to judgment. The auditor's judgment about the pervasiveness of the effects or possible effects on the financial statements. Financial statements are materially misstated if it's just one area that's material, but everything else is fine. It's going to be a qualified opinion, except for this particular area. If we do not have sufficient evidence to do the audit. Remember way back when we talked about asset inventories and why you want to have your auditor on board before year end so that they can perform those inventories? This is why. If I can't perform your inventory and verify the number reported, and I cannot use other procedures to back into it, then I have to qualify the opinion because I was unable to get sufficient appropriate audit evidence to verify your fixed asset balance, which I can guarantee was material. Okay, does that make sense? I have one yes. All right, we're gonna run with it. We've got two people that say yes. So we're looking at the financial statements. We can't verify the fixed assets. And we cannot verify. Ooh. We can't prove the MIPA balance. We can't verify the cash or the attached liability because for whatever reason, we just didn't do it. And we didn't do our bank reconciliations timely. Depending on the situation, I would either issue a disclaimer or an adverse opinion. If I just don't have sufficient appropriate audit evidence for multiple material areas, issuing a disclaimer. If I have reason to believe that the financial statements are materially misstated and it involves more than one account, probably going to issue an adverse opinion. Financial statements referred to above are not presented fairly in all material respects. Questions on that? In 20 years of auditing, I think I wrote maybe 3 adverse reports and maybe 2 disclaimers. And they were all for the same client. Okay, just doesn't happen that often. It can happen. If it does happen, you 100% have to jump on it and get it resolved. But it's just not that common. Again, this is what I just told you. Auditor concludes that there is evidence that the misstatement is material, but not pervasive, or we can't include. Okay. That's weird to me. Is everybody in chat? You routinely get an adverse opinion in the area of component units because you don't include the casino statements in the audit. I've seen a lot of tribes who choose not to do that, and that's normally a qualified opinion because it's a scope limitation. You have chosen not to include the audit information, your audited financials for your casino, because internally your counsel has said none of your business. It's not unusual. Yeah, they have the right to do that. I'm really surprised that they're issuing an adverse because these normal that I've seen has been qualified, or they would issue, yeah, it's qualified. Financial statements referred to above present fairly in all material respects financial position of your tribe, except for the results of the casino operations, which were not included. Yeah, I'd be real interested in what their thought process is. And it may make perfect sense. I want to be very clear. I'm not second guessing your auditors because they're on site and I'm not. But that's just the way I've seen it presented in the past. See, now I'm going to be thinking about, are you a housing department? Or a housing authority? And to be clear, I agree that you're the housing department. That's the problem. Yeah. Because if you were a housing authority, you could just do a program specific. That is interesting. And again, I'm not questioning your council's decision. They don't have to include it if they don't want to. The standard says, and again, we talked about this, everything that's under control of council has to be included in the single audit. They're making the decisions, it's got to be included in the single audit. In general, if it's not, I've always seen it as a qualified opinion. Yeah, reach out if you want to discuss further. Or if after you talk to them, they give you some information that you want to discuss, reach out. Okay, here's examples where you would have a qualified opinion. Misclassified accounting entries, capital asset purchases. I'm telling you, that is capital assets. They're not as messy as they used to be, but they're still not pretty. We coded all of our assets purchases to supplies instead of capital outlays, so they weren't capitalized. So everything's right except for that. Happens all the time. Adverse opinion. Auditor concludes that the misstatements are both material and pervasive, and leads the auditor to conclude that the financial statements do not represent the entity's accounts and the audited statements do not comply with GAAP. Have to provide specific information as to why this opinion was listed as adverse. Were there significant GAAP departures, or did you just look at the financials and go, yeah, we're not going to do that? Were there specific errors that were material to the financial statement? Can pretty well guarantee that if you have an adverse opinion on compliance, you're going to get a call from your funding agency. Guarantee. Questions on that? Okay, disclaimer of opinion. For whatever reason, we cannot obtain sufficient appropriate audit evidence on which to base the opinion. When I did a disclaimer, there was a disclaimer because bank reconciliations were not done timely, and once they were done, didn't support the amount of cash reported on the financial statements. Cash is obviously material. There's no way, because it was, oh, they also hadn't done their audits on time, therefore we were trying to figure it out 3 years after the fact. Financials, bank recs, don't agree. How do you know which one is right? We couldn't tell. So we had to do a disclaimer of opinion. Scope is limited. They receive financial data that they cannot audit because the source documents are not available, or the source documents do not agree. Auditors can't confirm classification. We have dueling evidence and we do not know which one is right, and we've tried really hard to figure it out and we can't, so I'm not issuing an opinion. What do you do in that case? You're the audit client. What do? You got a disclaimer. Do you hire another auditor to come in and try and sort it out? No. Yeah, they're not going to be able to figure it out either. It doesn't exist. We're going to take a disclaimer for this year. We're going to try again for next year. We're probably going to have a disclaimer on the beginning balances for the next year's audit, just because we had a disclaimer last year. But by the end of this year, we should be able to verify all of our ending balances, so we'll be clean for the following year. Does that make sense how that's going to work? Even if you come in the next year after a disclaimer, we still have questions about the starting balances that cannot be verified. We can get you to the ending balance though. Don't know why it did that. That was bizarre. Okay, questions on that? All right, let's talk about audited financial statement submission to the Federal Audit Clearinghouse. Back to your responsibilities. You, the auditee, are required to prepare financial statements that reflect financial position, results of operations, and changes in net assets, and if appropriate, cash flows for the fiscal year audited. Yeah, so here's a confession. One of the reasons I really hate to do housing as a proprietary fund, other than I don't feel it's as technically correct since we're doing it with grant money. If you do it as a proprietary fund, you have to do a statement of cash flows. And I'm not going to lie, I don't like doing that. I will, but I'm going to complain about it. How many of you are doing cash flow statements for any of your grant programs? And honestly, the only one that you might would be housing. You have to do a cash flow statement for any enterprise programs, any proprietary funds you do. Anybody dealing with that? Hate it, hate it. Okay, so here's the basic pieces of the audit report. Management's discussion and analysis. What does that do? What is the MD&A? And who does it? Auditee prepares the MD&A, absolutely. What is it? Yeah, it's the information. Some of it's required, you know, some of the budget to actual stuff we have to include. But a lot of it is just, hey, here's how things went from last year to this year. Here's some of our key accomplishments. Here are the significant changes in the financial statements and what caused it. Why did we suddenly have so many grants from 2019 to 2020? Just a basic overview by management of here's what's going on. Here's what we've been doing over here. Okay, it's pretty simple. Government-wide financial statements. Those are the ones where we talked about where they're turning modified accrual, government fund accounting into proprietary fund accounting. This is where they take your original financial statements and make them comparable to corporate financial statements. Not going to spend, yeah, government-wide is the long-term focus and is presented on full accrual. The fund's financial statements are the ones that present in accordance with government rules. For your purposes at the management level, you're going to really focus more on the government fund's financial statements. Okay, so your government funds financial statements has a balance sheet. Here's all of our government funds in total. Then we have a statement to reconcile what is on our regular government fund financial statement to what we're showing on the statement of net position. Here's what was added, here's what was taken out. The big things that get added are long-term liabilities, capital assets, maybe depreciation, accrued payroll. Okay, so statement of revenues, expenditures, and changes in fund balance. And then again, we'll have a reconciliation of that to the statement of activities. A statement of activities is not going to show capital outlays as a line item. Why not? We've got capital outlays in our government fund financials. Does everybody agree? Here's what we put into building. Here's the car we bought, all of those things. That's what it looks like on the government side. On the government-wide side, this is where we're going to basically close out those capital outlays and just take them to the particular fixed asset line items. Make sense? Kind of, sort of. Okay, then we're going to have here statement of revenues, expenditures, changes in financial and fund balance, budget versus actual. What did we plan? What actually happened? Where do we explain the differences? When you're thinking about your audit report, where are you going to explain what happened with budget versus actual? We know we're going to address it in the APR, but where in your audit report will it be addressed? I would put it in the management discussion and analysis. You can footnote it, but I think it's most appropriate to put it in the MD&A because this is where you're explaining to anybody reading the report, here's what happened. Here's how everything played out this year. If you have additional proprietary funds, they'd go in the next section. If you are a housing authority, you're probably going straight from government funds to the required supplemental information, including notes to financial statements. What's in the notes to the financial statements? How many of you have ever looked at the notes to the financials? One of the biggest pieces, yeah, you've got your basic accounting policies in there. It's also, it gives you the definitions of what these line items are talking about. What do we mean when we say cash and cash equivalents? What is MIPA? What are we talking about? Why on earth do we have investments? What's involved there? What are deferred revenues? All of those things are explained in the notes to the financials. There's a lot of repetition between the MD&A and the notes to the financials, particularly around fixed assets, cash disclosures, that type of deal. Okay, then we have our compliance reports. Internal control report, compliance opinion. What else is included in that? With the single audit section? Findings. Findings and question costs. You start with the summary, and then you'll have the backup. Okay. Copy of your audit report is only required to be submitted to the Federal Audit Clearinghouse under 2 CFR 200 subpart F. You are not required to submit a copy to HUD. because HUD is supposed to pull it from the FAC. Okay, you have to submit your audit to the Federal Audit Clearinghouse. As a tribe, you have the option to not make your audit publicly available on the Federal Audit Clearinghouse. Okay, the data collection form will be there. Your actual audit report will not, if that's what you choose. Not only do you submit to the Federal Audit Clearinghouse, but if you are a TDHE that is receiving a separate audit report from the tribe, you have to submit a copy of it to the tribe so that the tribe can disclose all of the pieces necessary for them to have full disclosure of all components. Make sense, sorta? Are any of you making your audit publicly available? It means that when you go onto, if you go onto the Federal Audit Clearinghouse website, I can search for your audit, okay? And there's a list of your annual audits and when they were submitted and for what year. Your data collection form will show up if I click that button. Your audit, you have the ability to say, we do not want our audit publicly available, which means I cannot go to that site and download your audit. Oh yeah, you can absolutely look up audits in the clearinghouse. I work on a couple of other grant programs and I spent good portions of the last week checking to see if audits were submitted timely. Yeah, absolutely go look and see what information's out there. This is public information. It is entirely up to council whether they want to make their audit publicly available or not. From what I know, just from what I do, I would say most tribes are now opting out. No, it's fine. And again, one of the reasons a lot of tribes are opting out is because they don't want to make their casino information public. Fine with me. Okay, questions on that? Seriously, I strongly encourage you to go to the Federal Audit Clearinghouse and either Google a neighbor or search a neighbor tribe or search your own and see what information is required to be out there. And the basics are who you are and who's the contact person. As in you, the tribe, who's the contact person, who did the audit, what's the audit period, was what kind of opinion was issued on the financial statements. Then as you go further in, there's a list of grants. Basically the CFA is reproduced in there with a listing of the grants and the dollars spent. Will identify which grants were considered major programs, will identify whether the report on compliance was unqualified or qualified for each major program listed, and how many findings there were. There is a section on findings. There's not much information. Best case that's going to be disclosed is which category. Like, was the finding on allowable costs? Was the finding on eligibility? Was it procurement? Was it reporting? As to what specifically happened, that's not included. Here we go. You may choose not to authorize the Federal Audit Clearinghouse to make your reporting package publicly available. If that is the case, you are now responsible for submitting the reporting package directly to any pass-through entities through which you've received an award, pass-through entities for which the summary schedule of prior audit findings reported status, and you have to make copies of the report package available for public inspection. How do you do that? How do you make it available for public inspection? If I'm a tribal member, I can come in and request to look at the audit. And if I do, and I prove that I'm a tribal member, then you hand me a copy of the audit, probably escort me to a conference room or something, and I can go through and ask questions. Any questions on that? Reporting submission due 9 months after the end of the audit period. You must ensure that you do not include protected personally identifiable information anywhere in the report. If I had eligibility findings, I will provide a list of specific participants to counsel if asked. I will never, ever, ever include the names of those individuals or any identifying information in the finding. Okay, makes sense? Susie and Bobby did not have their tribal membership cards in their file because Jody knows them and didn't ask for them. Yeah, no, that's not going to happen. Federal awarding agency or pass-through agency is responsible for issuing a management decision and must, within 6 months of acceptance of the audit, auditee has to start fixing those corrective actions as soon as they know about it. So everybody wants a clean audit, right? How do you get one? Ask questions. How many of you have a fee accountant that you work with? For those of you who do have a fee accountant, make sure you're reaching out to them regularly to make sure that everything's moving along smoothly. Make sure that you're providing them all of the information they need. If you have questions, ask the questions. Can always ask your auditors, and they can answer, again, they can answer general knowledge type questions. If they tell you that they can't answer that because it's a management decision, ask them for a referral of who you can talk to. Or if there's somebody in their office who can help you that doesn't work on your audit. Use a calendar reminder for deadline submission of reports with deadlines. Okay. Here's what I want you to remember. A lot of the HUD rules state dates, number of days after the end of the fiscal year. Okay, we have to submit within 90 days of the end of the fiscal year. 90 days does not mean 3 months. If your 90-day period starts September 30th, guess what? Your deadline is not December 31st. It is December 29th. Do not find that out the hard way. Make sure when you have specific number of days, verify you're getting it done. Review your transactions, ensure you have supporting documents. We always have source documents. We reconcile everything. You may reconcile monthly, you may reconcile quarterly, depending on the number of transactions involved. The last thing you want to do is wait till year end to decide to do your reconciliations. Would also add, don't wait till the end of the year to do your inspections either. Promise you something is going to happen and screw everything in. Perfect world, we're going to engage the auditor early enough so we've got time to do the PBC and make sure that the auditor has an opportunity to do any field work they feel is necessary for year end. Review your accounting software and your chart of accounts to make sure that you've got it set up so that you're tracking all revenues and expenditures for each individual award. Make sure that the way you have your account code set up is going to be effective for your reporting purposes. Think about all of those different ways we talked about yesterday to show financial results. Is your system set up to do that? Can you do it through Excel? Do you have the information? Accurate, current, complete financial statements. You're verifying, you're tying, you're reconciling throughout the year. When you get to year end, you're going to have your final adjusted trial balance and your CFA. Create an audit work paper folder and a backup work paper to support your trial balance numbers. When we talk about a work paper folder, does it have to be a physical folder, or can you have a folder set up on your computer and you just drop everything in there? Guess which one I would do? Absolutely. Always go electronic. As long as you have good backups. Okay, review your policies and procedures to ensure that they are current. If you look at your financial policy or your procurement policy, and you see anything about A102, A133, or A87, put in a request for policy help with ONAP because your policies are outdated. Within the last year, I've worked on policies that were written in 1983. So, you know, don't feel bad if you're in that pile. And I do not judge them for it either. How are you testing your policies? What's the other method? You're testing your policies as you are doing your self-monitoring. If you have not taken a self-monitoring training and it's going to be your responsibility, either request it through ONAP or watch for the next virtual. Perform your accounting in accordance with government GAAP. How do you know that you're performing in accordance with government GAAP? You're going to ask your fee accountant or your auditor. Review the compliance supplement at least annually so you know you're on the right track. Here's the stuff we know they're going to test. Are we ready? Anybody have any questions? Anybody have any comments? Elizabeth? Pretty please complete the post-training survey. This is still a fairly new training, so it's really helpful for me to see some feedback as to what's working for you.
Yep, if everyone can take a couple minutes just to complete that post-training surveys, like Christine said, that really helps us, make edits or alter anything that, we may be needing improvements on. Also, within the next week, you'll be receiving your certificates, and there will be a link for that post-training survey within that email as well if you don't have time today.
Hey, questions? Congratulations. You survived 3 days of intermediate financial management. You're done. I know. There were points you didn't think you were going to make it, didn't you? You guys were an awesome class. I really appreciate everything. I know we all survived. I'm glad Lucius brought you joy. Y'all, thank you so much. You were a really great class about participating, answering questions, asking. I appreciate it so much. It makes it so much easier on me to have you all participating. If there are areas that you would like to see included or expanded on, please say so in the evaluation. We really do take that very seriously. And you don't have to hear my voice again tomorrow. Aren't you glad?